Well, it's a very good morning from him, and of course, it's a very good morning from me. Good morning, and welcome to my mortgage live stream. So let's go on here because we can. Welcome. Wasn't it dark this morning? What was it? 7 o'clock we got up this morning. It was pitch black. Of course, the hour goes backwards at the weekend, so make sure that you change your clocks, as they say. Enough of that. Let's get on with our live stream. Got a little technical update for you on some CMAP material, CMAP 2 actually. We're going to take a look at the mortgage deed and the mortgage offer. Just a nice little update, bit of a CPD for you really when it comes to it. So looking forward to enjoying that session with you that's coming up. Interesting week. We're waiting for the budget. I don't know why. I'm not entirely sure what difference that's actually going to make. Well, it will make a lot of difference to capital gains tax, inheritance tax, and stuff like that, but not to the property market, not to the housing market. So we're going to have to wait and see what goes on there, won't we? But I'll keep you informed of what happens. Anyway, without any further ado, let's head over to our whiteboard, shall we? Where we're going to take a look at our topic of the day. Now, the topic I've chosen today, really, just to brush up a few videos on our bootcamp, really, is the mortgage offer and the mortgage deed. Now, the mortgage offer and the mortgage deed are two items created by the lender, the product provider, of course. Now, they use lawyers to do the mortgage deed, but they themselves do the mortgage offer. Now, the mortgage deed there's a template created, of course, by the lender, and they give that to the conveyancer to do the legal work for them. But let's go back a few steps. So you've applied for a mortgage, and it's all gone through. So you've done all the surveys, you've done all the checks and credit checks, all those things. And the lender says, yes, you can have it. You can have your mortgage. The lender say yes, computer says yes, kind of thing. And the first thing they do, of course, is they issue you with the mortgage offer. Now, the mortgage offer, which is my little picture over here, is a report, PDF in paper as well, sent to the customer in order for them to get confirmation that they've been accepted for the mortgage. It's pretty much that, really. The first part of the mortgage offer, here's page 1, if you like. This gives you details about the loan, the interest rate, the amount they're lending to you. They give you like a 6-month kind of waiting period, a 6-month mortgage offer. There's the binding mortgage offer now as well, which effectively gives you a 7-day reflection period, which is pretty much where the lender just keeps quiet for 7 days while you reflect, man, on your mortgage offer. And if you don't like it, you don't have to accept it, but you could do that anyway, can't you? So it's kind of like a binding offer on behalf of the lender. Not much more to say about the front page. It just gives you details about the mortgage, really, that you've applied for, and the fact that they're saying yes to the amount, the term, that sort of thing, the method of repayment, that sort of thing is all confirmed. Now, the important thing about the mortgage offer, though, is it does have a number of special conditions. Now, special conditions are unique to the particular case. Now, it has a lot of standard conditions already pre-printed. I'll put that in there for you. Standard conditions already pre-printed in the mortgage offer. These are things like the expiry date, that sort of thing. But the special conditions are unique to the client and unique to the property. So, for example, it may have some work needed doing to the property. It might be a retention on the property or an undertaking that's required to do some works to the property. That might be a requirement. It could be any other type of condition. For example, it might be somebody over the age of 17 who's living in the property, the teenage son, for example. And because he's going to turn 18 shortly, he will have a majority. Of course, he will reach the adulthood, 18. Therefore, the lender will be a bit worried about having him in the property and not partaking to the mortgage. So they'll get him to sign a consent to mortgage form, which pretty much overrides his rights to live there if they have to repossess. So that's these are special conditions. That's all they are. And there's a number of them. And a good mortgage broker will go through those with the client. What you should do, of course, is the mortgage offer meeting. You should run a video meeting for 15 minutes where you just go through the mortgage offer with the client, because sometimes they need explaining stuff. And don't do it face-to-face, only for that, but get online, get on video, share the mortgage offer, talk it through, and they will be extremely happy. And this is the time, by the way, that the mortgage advisor, mortgage broker, that's when she can obtain a testimonial from the client with your Trustpilot or your Biased or whatever it is you use, vouched for, whatever site you use for your reviews. You should get them at the mortgage offer meeting, because the client just loves you to bits because they've had their mortgage offer, haven't they? So that's pretty much all there is to say about the mortgage offer. Now, the big one is the mortgage deed. So what happens now, of course, is the mortgage offer is sent to the applicant. The mortgage offer is sent to the lawyer, who then starts to process the mortgage side of the legal work. They're doing the conveyancing of the property, of course they are, but the lender is now instructing them to do the legal work for them. Client has to pay for it, but the lender obviously is the one that instigates this legal work. And part of that legal work is for the lawyer to draw up what they call the mortgage deed. Now, the mortgage deed is the contract. This is the legal contract, the legal charge, if you like, that sets up the mortgage on the property that the client wants to buy. And this mortgage deed is the most important thing ever invented by lenders, because this gives them tons of rights, as you can see here, and makes the borrower do tons of things, promises or covenants. And this really creates the mortgage itself. A lot of people think the mortgage is the loan on the property. It's not. The mortgage is the legal charge which allows the loan on the property to be secured against the property. And if they don't pay up, they can have the property back. So the mortgage deed itself then has got quite a lot going on. And I need to talk through these with you in a little bit of detail, really, because you need to understand them. The client might ask you to go through them. The lawyer's supposed to, but they do it really quickly because they're not really paid to go through it. You are, and you should do this, of course, on completion. Now, let's have a look at the borrower's covenants. These are promises that the borrower must keep to, otherwise they could lose the property. And there's a number of these. Of course, they've got to maintain payments. They've got to make sure they keep up to date with their payments. That makes sense, doesn't it? You don't need to say much more about that one. They have to keep the property in good repair. Good repair. Now, I remember years ago when I was a building society manager up in London, assistant manager I was, and once a month we used to go around and have a look at our properties that we had on the mortgage books. And it was a great day out because you went to spend the day in the manager's car, and I had binoculars, and I used to go around looking at the properties to see if they were in good nick. And seriously, that's what we did. We had to check. Nowadays, they don't bother, do they? They just make sure that the client keeps it in good repair. You're not to sublet without permission. They include lodgers as well, but if you're going to rent the property out with short hold tenancy, all that stuff, you need to get permission from the lender. A lot of people don't bother. I get that. My mate next door, he's not my mate, he's my neighbour. He rents his place out as an Airbnb. I bet you he hasn't asked permission from his borrower, his lender, for that. But you're not to sublet. You have to comply with all law that's relevant here. Obviously, property conditions, property covenants, the law of the land, the law of the area, the covenants laid down by the local authority. You have to comply with all those as well. It makes sense, doesn't it? And that includes the property covenants that goes with the property. Thou shalt not keep chickens, that sort of thing. You have to make sure you observe the leasehold conditions. If there's a leasehold, in other words, if you have a flat and it's leasehold, you have to adhere to the lease conditions. And if you don't, then the lender can actually take over and make sure you do. Otherwise, there could be a forfeiture of the lease, which could, of course, you could lose your property and the lender would lose their security as well. And the other big one is you must insure the property, the bricks and mortar of the property, that is, the building's insurance. So there's quite a lot of conditions that you have to adhere to, and you've probably read all sorts of stories that go on in mortgage properties. And if any of these conditions are not met, then the lender has the right to take over either doing the condition or take over the property. So, for example, if the property is not in good repair, the lender has the right to repair it and charge the cost to the mortgage deed. If the property's not been insured, the lender has the right to insure the property and charge the cost to the mortgage account. So that's covenants. The big one, though, are the rights that the lender has. The lender has a lot of rights. So let's go through those for you. First of all, they have the right to call in the mortgage at any time they want. They don't actually have to wait for you to not pay your mortgage payment. They can call in the mortgage at any time that they want. They don't, of course not. Can you imagine the press picking this up? Mr. and Mrs. Brown were evicted for no fault of their own, kind of thing. It's not going to happen, but it could happen in theory. They have the right to make charges to the mortgage account, such as arrears charges, insurance charges, that sort of thing. They have the right to put charges against the mortgage account as well. They also, of course, have the right to insure the property if you don't. And that's where you get block policies. The block policy is the great big insurance policy that covers a number of the mortgages or the properties that the lender has on their books as insuring the property. They have to meet legal requirements and all those good things, of course. They have the right to let the property. So if they are the mortgagee in possession, if they repossess the property and the property ain't worth selling at this moment, they can let it out to make some income, and that income, of course, can then be used to pay off the mortgage arrears. They have the right to let the property, which is quite interesting, isn't it? They also have the right to consolidate. Now, this confuses lots of people when they read this. They have the right to consolidate the mortgages held by the client. Now, some clients might have several mortgages with one lender, particularly buy-to-let landlords. They might have 2 or 3 mortgages on 2 or 3 different properties. Now, the lender has the right, if they want to consolidate all of the mortgages into one and all of the securities into one, which means that if the client wants to redeem one mortgage, then the lender can actually force them to redeem all of the mortgages all at the same time. And that might be useful if they're worried about one security, for example, being worth less than the mortgage itself. And therefore, they might say, look, if you're going to sell that property, we want you to sell every property and pay off every mortgage, because in combination, all of your properties adds up to the mortgages. But that one over there, that property is worth less than your mortgage. That's called consolidation. And that's a right that they have as well. They also have the right to transfer the mortgage. There you go. They transfer them. Remember, the mortgage, by the way, is not the house or the loan. The mortgage is the legal charge. And they have the right to transfer the legal charge to another provider. Now, they have that right. They don't need your permission for that. Now, it happened to us. We took out a mortgage 6 years ago with Metro Bank, which was rather lovely. Now, a few years later, Metro Bank transferred the mortgage to NatWest, because they can, and they did. And we suddenly had a mortgage with NatWest, which suited us because NatWest is a really good lender. And that's something they have the right to do. What they're doing there, of course, is they're not packaging it up into a mortgage-backed security and selling it on, which a lot of specialist lenders do. What they're doing there is they're literally selling the mortgage book to NatWest. And they would have sold a couple of billion, I'd have thought, depends on how much money they had involved, a couple of billion mortgage book to NatWest, who would have paid money to Metro, who could then relent it or use it for whatever purposes. And suddenly NatWest have got themselves like 1,000 mortgages with mortgage clients, mortgage accounts, without doing any marketing work or having people selling them. So that's a pretty good deal as far as they're concerned. That's called transferring the mortgage itself. Remember, it's not putting it into a mortgage-backed security and putting it out for sale. That's a very different type of thing. We talk about that in other videos as well. They have all the legal remedies as well. They have the legal remedies. That means they have the Law of Property Act 1925 and the various abilities to repossess the property if the person doesn't pay it, get a possession order from the county courts and repossess the property. So they've got lots of rights there as well. So as you can see, the lender's got quite a lot of rights here, which, they're lending you big bucks, so they should have. And you've got a lot of promises you've got to keep. So it's a bit of a one-sided thing, this mortgage contract, but hey, that's what it's about. Don't forget to spend some time with your client going through those things, because they will value that information that you're giving them. And it will mean that when you do a review 6 months later, 12 months later, they'll be happy to keep you as their mortgage and protection advisor. And that's, of course, what you want to be doing. So that really endeth the mortgage deed and the mortgage offer. Hope that's been useful. Bye. Brilliant. Okay. So we like that, don't we? We quite liked the mortgage offer and the mortgage deed and all those good things. Now let's finish off our session today by giving you another sort of sales idea, or just an idea to help you run your business, run your mortgage and protection business. Now this one's called Disrupting Our Fee Model. And I'd like you to have a think about this one, because however you earn your living through prop fees, commissions, or broker fees, you might want to take a look at how you do that, rather than just copying what everybody else does. So this one's called Disrupting Our Fee Model. Are we ready for a change? Now, like you, I receive dozens of cold emails from companies who've bought my email address amongst many other thousands. Most of them I delete, but today, though, one attracted my attention. and I'll read it out to you. Paul, it said, so use my name. When flat out running Archer Training Limited, do you struggle to step back and check you're shielded from legal risks? I'm reaching out from Legal Vision. We're a new age online law firm that provides startups with affordable, ongoing legal support via a membership model. I thought this sounds rather interesting. Imagine having access to a team of experienced lawyers who can assist you with unlimited document reviews, drafting, trademark applications, and legal advice consultations, all for an affordable weekly fee. Now, I hand that up a little bit, of course I did, but seeing a legal firm adopting such an innovative business model is actually quite fascinating. You see, they're diving headfirst into legal fees, aren't they? Replacing the traditional hourly rates with a more predictable weekly retainer. Now, it's not an entirely new concept, but how they promote it is unique. And it got me thinking about mortgage protection, mortgage advisors, mortgage brokers, financial advisors, and our aging model of charging fees for work carried out, funds under management, percentages and hourly rates. Perhaps an affordable weekly amount might be worth looking into. Any thoughts? There you go. That makes you think, doesn't it? Quite an interesting little concept, that, isn't it? All right, so we're going to wrap up now. To wrap up our weekly mortgage live stream for you. Hope it's been useful information as always. We'll be back next week as always. Got lots of things going on this week again. Lots of freebies happening now. I'm doing a webinar on Thursday night to people starting off in the mortgage business, helping them with their business decisions really, and that's coming up again. If you're not on our mailing list, as always, here's the address there for you of our weekly Development Insights mailing list. Just QR scan that. Be happy to take your order if that's the right thing to talk about. There's no order, but you get onto a free membership, you see, and we keep you informed of all the free things we're doing and all the extra benefits that we're providing for mortgage and financial advisors. Lots of things going on there. Other than that, I'm going to wish you to have a fantastic day. Enjoy the darkest mornings of the whole week, and don't forget to put your clocks backwards on Sunday, which means that I think you get extra hour in bed, don't we? Which is rather nice, but it gets darker in the evenings. Welcome to the winter. Other than that, I wish you all the best. Have fun, everybody, and I'll see you all next week. Bye.